Great news! Stand a chance to win up to 25,000 cash reward in Bitcoin when you join AREIX flagship crypto portfolio challenge this coming March. As a contestant, you are invited to develop portfolio management strategies with machine learning models and strive for the highest absolute return. Organized by AREIX Analytics Limited, a leading wealth tech startup in Hong Kong Science Park, this challenge is proudly sponsored by established companies like Diginex, Cloverland, AWS. Not tech-savvy? Don't worry. Be reassured that throughout your journey during the challenge, AREIX and AWS will support you with extensive resources from AWS Cloud Credits, self-learning portals, pre-built programming framework to market data feeds. You name it, we have it. What are you waiting for? Note down the key dates to form teams and apply. Upon application, you will receive a welcome package and onboarding guide. Faster fingers first. Well, stay tuned for the upcoming info sections about the challenge on 13th of March too. We will be inviting a special guest speaker from the global crypto exchange firm to do exclusive sharing. Should you have any questions, please visit our website and contact us by email. Register now and look forward to your application. Great news! Stand a chance to win up to 25,000 cash reward in Bitcoin when you join AREIX flagship crypto portfolio challenge this coming March. As a contestant, you are invited to develop portfolio management strategies with machine learning models and strive for the highest absolute return. Organized by AREIX Analytics Limited, a leading wealth tech startup in Hong Kong Science Park, this challenge is proudly sponsored by established companies like Diginex, Cloverland, AWS. Not tech-savvy? Don't worry. Be reassured that throughout your journey during the challenge, AREIX and AWS will support you with extensive resources from AWS Cloud Credits, self-learning portals, pre-built programming framework to market data feeds. You name it, we have it. What are you waiting for? Note down the key dates to form teams and apply. Upon application, you will receive a welcome package and onboarding guide. Faster fingers first. Well, stay tuned for the upcoming info sections about the challenge on 13th of March too. We will be inviting a special guest speaker from the global crypto exchange firm to do exclusive sharing. Should you have any questions, please visit our website and contact us by email. Register now and look forward to your application.
Good morning, everyone. Thank you for attending today's info session for the Crypto Portfolio Challenge 2021. I'm Avis from AREIX, today's MC for the info session. Today's session will be divided into two parts. The first part will be a brief introduction of the competition and some key highlights you might need to pay attention to. The second part, it will be a sharing session by the guest speaker from Diginex, who will share with all of you the latest developments of the crypto trend. Without any delay, let's get started. For today's session, it will last for around an hour. The AREIX Crypto Portfolio Challenge 2021 is the first competition held by AREIX for the graduates, recent graduates, and also university students. We are a wealth tech startup who specializes in the development of a wealth management robo-assistant for our users. We are very happy to have Diginix as our premium crypto sponsor. Diginix is the first crypto exchange who listed on the Nasdaq, the US stock exchange. And we also have AWS Educate under Amazon and also Cloverland as the competition sponsors. If you are interested to join the competition, we welcome all the students and recent graduates, no matter you are from Hong Kong or overseas, to join this competition. You can be a single contestant, or you can also form a team with maximum member of 4 to join this competition. We will have the following amazing award for the winners. There will be 2 categories of the award, the Best Modeler Award and also the Best Presenter Award. So for the champion of this competition, you will win and crypto with value equivalent to 12,000 Hong Kong dollar for the winning team. And then we will also have the live coaching program, the Amazon Echo Dot, and potential internship opportunities for our winners. In order to help you to win this competition, we will provide some resources to help you to build your models. We are very happy to have Amazon to sponsor every contestant of this competition with 100 Amazon Prime Credit. You can build your model on the Amazon Educate platform. And then we also have the pre-built programming framework for you to develop your machine learning models and to collect the market data. All the details will be provided after you submitted your application form. Here are some of the key dates that you might need to pay attention to. The competition has opened for application. So you can start to do your application until the 27th of March. So after the application is closed, you will have another week to submit your code and video. So the deadline will be on the 3rd of April for code and video submission. But we highly recommend you to submit your code by the end of March so that we can have enough time to have a quick look of your code and also video and to let you know if anything is missing or any amendment is needed. And you have enough time to do the amendments. Otherwise, if you submitted your code at the end of the deadline, then you might not have time to do the addition. After the submission is closed, then we will have the real-time model scoring and public voting period, starting on the 5th of April until the 14th of April. So everyone, every contestant and the public can see how does your model perform on our AlphaGen portal during this period. And then we will also find the winner at the end of this scoring period. On the 24th of April, which will be the award ceremony, every winner of the competition has to join the award ceremony. Otherwise, it will be viewed as a give-up of the award, and then so there will be other teams being presented the award. So please pay attention to this. And then for the application, there are 2 steps you need to complete. For step 1, you need to fill in the registration form. Every member of a team need to fill in the form. So no matter you are the team leader or team member, you need to submit separate application form by the 27th of March. And then for step 2, every contestant also needs to register on the AlphaGen portal. The details will be given to you after you have submitted your application form. And then for the submission, which ends on the 3rd of April, only the team leader need to do the submission. And then there are 4 items you need to submit in order to complete your application to the competition. So be reminded that only the team leader needs to do the submission. And then you also need to fill in the same email address that you used to apply the competition. Otherwise, you will be disqualified from the competition. For the judging criteria, there are 2 awards. And for the Best Modeler Award, it will be determined by the crypto portfolio who generates the highest absolute return in the 10 scoring days. Then, with the highest absolute return, you will be the champion and also the first runner-up. For the Best Presenter Award, it will be determined by the most like who get on the AlphaGen portal from the public. So for the 40-second video you take to introduce your model and also your team, it will be a very good tool for you to get more public voting and likes over the AlphaGen portal. So that's it for the brief introduction of the competition. For the following part, I'll pass the time to Adam, our guest speaker of today's sharing session on the crypto development. Adam Choi Townsend is the head of sales from Diginex, and he is also a very seasoned professional in the crypto field. So let's pass the time to Adam to share his view on the crypto. Over to you, Adam.
Okay, so hi everybody. My name's Adam. Adam Choi Townsend. I've been asked to say a few words on behalf of Diginex for our partners AREIX. So we're really excited about the Crypto Portfolio Challenge. And the theme that I've got to talk about today is going to cover a few different things. So it's going to cover some information about Bitcoin and some information about the internet. And that will cover some of the dot-com boom that happened about 20 years ago when I was around your age. So when I was in my 20s, and I'm unfortunately nearly 40, which is pretty terrifying. But without going into that, today I'll talk about who Diginex are. So obviously proud to sponsor this event and the Crypto Portfolio Challenge. I'm going to cover who I am in more detail. Like I said, when I was a graduate, the dot-com boom was going on, so I'll talk about that. A few of you have probably heard of Bitcoin, and I want to talk about that, but maybe not everyone has, or if you have asked, there could be some questions about it. So I want to just explain from a very basic perspective what Bitcoin is, and then to delve a bit deeper as to why I think it's valuable. And I'm going to compare it to the internet. So what's very important is Bitcoin and the internet both have disruptive value. And I think that there's a parallel to draw that not everyone talks about. Everyone talks about it as digital gold. But it's really interesting to think about it from a slightly different angle. So then I'm going to talk a bit about these market cycles. So people use the word bubbles quite a lot. That's a word that we would like to avoid when we talk about markets. But there's probably some things you can think about as a young investor when you're thinking about these new asset classes, and some lessons to learn from the dot-com boom. And I've got some final takeaways for you afterwards. So first of all, who are Diginex? Diginex are the first digital asset ecosystem to be listed on the NASDAQ. So you may have heard of crypto exchanges out there. There's a bunch of different ones. I think there's about 250 easily to find online. And there's about 10 to 20 with most of the volume. And we're the first one, or the first group with an exchange listed on NASDAQ. So to be publicly recognized, Diginex have the ticker EQOS. And we're more than just a digital asset exchange. I mean, the group has got all kinds of business units. We've got an asset management division, which really is focusing on offering investment products to different people, that constitutes like a fund and some structured products which are licensed and then all rolling out and all available now. And we have a markets division, and then the markets division covers an exchange which is called Equos, a custodian, which really sells to keep people's Bitcoin really safe. We have a trading solution called DigiNex Access, which aggregates to liquidity from all over the place and allows people to trade it in a really efficient way. We do OTC, where people want large amounts of Bitcoin. They can call one of our brokers and we'll help facilitate a large amount. And we also have a capital markets division. And the capital markets division, kind of like in traditional finance, really deals with the issuance of new securities with this option to be able to have it as an STO or a security token offering. So we can do both, but we add a lot of value on security token offerings. So all that breaks down to three types of things our company does, because a lot of that might just have sounded like noise. But what we actually do is we help people to trade Bitcoin if they like trading it. We help people to just buy and hold Bitcoin with the custody business and the OTC. And then we have these investment products, the people who like using a hedge fund or some kind of structured product. We can do those sorts of three things. And the mission really is to help disintermediate traditional finance from third parties and get them into the digital asset space. I mean, that's our niche and that's what we're here to do. And so who am I? Well, I'm the head of sales at DigiNex in the markets division. And for the last several years, I've been really interested in Bitcoin. Before that, I ran a charity. So for around 2014, 2015, I was in Myanmar a lot, setting up computer labs with solar power in a number of monasteries. And before that, I worked in telecommunications, where we were looking at low latency networks. But I learned a few things about the internet there. I also learned a bit about outsourcing. And before that, I was studying a degree in Leeds University and then at York University. So I did that in biology. And then that became something when I did a master's, which was biology and computer science together. So when I was a graduate, let's say this is between like 1999 and 2002, so like a million years ago, this thing was happening called the dot-com boom, and it was in full flow. And if you weren't, people of my generation or older than me will really remember this because it had a big impact in financial markets. But it was really, really similar to the sort of ecosystem that we've got today. So the internet wasn't on everyone's mobile phones. I mean, today, the internet's here, it's everywhere, and it's completely ingrained in everything we do, and you can't really escape it. But there was, when I was at university, we had these computer labs, and you could go into a computer lab and log in, and that was the only place I could use a computer. And I used it for Facebook, which had just come out, and the only people who really used Facebook were students. And you would try and find people from your high school who you never had contact with anymore, because people didn't have, they used mobile phones, but it was expensive to use them, and not many people had them. So when we went to meet each other, we had to use a map instead of a phone, and the world was just a very different place. It was something where it wasn't as easy to do stuff. It wasn't as easy to set up a company like the AREIX guys have just set up, and they've got all these resources online and are offering a service online. You couldn't do it in the same way, and things were much slower. But you had these people who would go around, and they were like these evangelists. And I would think that, they would tell you about the future, and they would say, this internet is going to change everything. They would say that the internet would disrupt the world. It's going to make everything much easier to use. You can email anyone, but soon videos will be everywhere. Eventually it will be on everyone's phones. And it was really hard to imagine that it would actually change the world that much. If I tried to use the internet, it would be slow. It would break often. It sounded really weird. You used to have these modems that made lots of noise. And it was just difficult to get my head around why this is going to add value. And it's kind of like if you look at Bitcoin or Ethereum or all of these other disruptive things that are out there, you've got people like me, and we try and say this is going to change the world. And when most people look at it that haven't looked at it before, they think, well, it's slow, it doesn't really scale. How do I use it? It's a bit complicated. I guess it's only for nerds. And that's how the internet used to be. So there's a bit of a similar parallel. But when I was studying, remember studying biology, and I started doing biology and computer science at the same time, because around 20 years ago, there was another thing that happened, which was called the Human Genome Project. So that was like a global collaboration of thousands of scientists and labs around the world that started sharing information on all the information they were sequencing on people's DNA. And it was really interesting because I started to understand the internet is changing how people work, and it's making people more efficient, and it's enabling people to share information really, really fast in a way they couldn't do that before. I mean, they don't have to send the information in an envelope anymore. I mean, you can just email it to people, and you can share databases, and you can see how the world was starting to change because of this disruptive technology. And you can start to imagine that things are going to be different. So I want to pause there. And now I'm going to talk a little bit about this thing called Bitcoin, which I'm sure some people are experts in the room on. But I'm sure some people have heard about and are thinking, well, what the hell is it? So it's actually the first implementation of this thing called like a distributed ledger. And it uses a blockchain to do that. So, well, it's actually not the first one, but it's the first one to become popular and get mainstream adoption. And for the last 20 or 30 years, people have tried to solve this problem in computer science, which is we've got computers. I mean, computers have existed for a while, but how do we get them to all agree on something or agree on a state? And for a long time in computer science, it was a problem to get all these computers that are connected by the internet to agree on a state, because they have to send messages to each other. And the messages to each other get, out of sync, because the messages get sent to each other using cables, and messages are sent by the speed of light, and there's a time lag in between all the computers. And that means that you can't get all the computers to agree on using it to hold money about who owns money, who owns what money. Because at any point in time, someone can try sending money to someone else, and the computers are out of sync, and they start disagreeing, and it doesn't work. So Bitcoin was this way of solving the problem of syncing all of these computers up. And the problem was called the Byzantine generals problem. It's worth Googling. So Bitcoin is very, very clever. It uses this concept of a blockchain where computers have all these messages, and they all get synced with this common protocol, this common timestamping service, where they can all agree on what this distributed ledger is. And it's all constructed in a particular way to enable that to happen in a way that is completely infeasible for it to be broken, overwritten, and it's very, very secure. So, well, that all sounds boring, right? You've got this decentralized ledger that all the computers can agree on. So what? Well, that means that we can start making new paradigms for what money should be. And Bitcoin's defined as this chain of digital signatures, the original white paper. Effectively, you can have these digital signatures that a complete set of computers can agree on, and it's economically secure. And it's like the internet in this weird way, where it just enables different things to be able to manifest themselves without people intervening. So what I mean by that is, I'll talk a bit more about Bitcoin in the future, but I want to compare Bitcoin to the internet. So you can think about it this way. The internet created disruptive value, and it did that by reducing the marginal cost of accessing information, and it made the speed of accessing information near instant. So if you used to be a newspaper and you were competing with an internet business, then the newspaper newspaper company would sell information, yesterday's news, at $1. The internet provides information now for free. And with this new paradigm, or not really for free, near zero marginal cost is a more accurate way of saying it. This new paradigm enables completely new businesses to form and create new business models where they say, well, people can get this information now for near zero, so we can be Amazon and we can distribute all these books and then other products using a store, and we don't need to have the overheads of having our own shop, and we can be, you know, undercut people on price, and we can be way more efficient. We can scale faster. So that's that kind of, these new business models were enabled, like Google, you know, all came about because of the internet. So with Bitcoin, you've effectively got this way of, it's about transacting peer to peer or with a blockchain. You know, once you scale these things, you can do it near instantly and at near zero marginal cost. And that's the underlying value of these decentralized ledgers. You can come up with these new business paradigms that enable peer-to-peer transactions to happen, and you don't need as many intermediaries. So you might not need a company to act like PayPal in the middle if we all use things on blockchains. And it goes way further than that. I mean, there's other things like Ethereum that are out there that enable smart contracts or effectively entries in this ledger, which are just bits of code and anyone can interface with, and they can move financial value around a network. People can build all kinds of ecosystems on top of it when you've got the imagination to do that. So they're both disruptive technologies. And going back to when I was your age, not many people understood what the internet was. Today, not many people understand what Bitcoin is. Today, not many people take the time to try and understand it, and then even fewer people are able to perceive the value behind it and build businesses on top of them. Maybe the first thing I can say as a takeaway point is you've got to listen to weak signals to be able to spot trends in the future, because you'll see stuff on the news about Bitcoin that will cover it's like digital gold, or it's got a low inflation schedule, and it's got all these things, and that's one signal you can listen to. But there's lots of other signals that you can be listening to. So some of them are just hype cycles where they're just saying, well, you should definitely go and buy it. And I'd say do your research and really try and understand these things, because just like Bitcoin, I guess a lot of people are going off to invest into it because they've seen it on television and they think they should get some. And during the time of the dot-com boom, lots of things like that were happening at the same time. People were saying you should invest in internet companies. So what was the dot-com boom again? I'm rambling a little bit, aren't I? Well, let's, hopefully it's all coming together, but during the dot-com boom, that was around 2000, everyone had listened to this story about the internet. The internet's offering lots of value, and it's we know why it's valuable. It's enabling information to travel near zero marginal cost, near instantly. And companies are coming up with disruptive business models. Companies like Amazon are coming up, but also companies like pets.com were coming up. And pets.com you probably haven't heard of unless you studied the dot-com boom. There were lots of companies that really didn't have a well thought out business model that people still wanted to invest in because it had this word internet and it was doing some disruptive internet technology, but no one really understood what it was. And they actually completely bottomed out, their business bottomed out about 86 days after they went and did an IPO. And there wasn't really any tangible value for pets.com, but because it was an internet business and it had lots of people looking at it, it appeared to be valuable to some investors at the time. And as a result, people who hadn't really understood the value behind their investments had just jumped into this thing, and fear and greed had took over, fear of missing out and greed of how much profit they could make. And the dot-com boom was actually a big bubble where there was too much liquidity going into the space, too many people were going in without really trying to understand it. They were risking too much, putting in too much money, and falling over themselves to invest in all these companies. And quite soon after there was the bubble burst, there was a massive fall at the peak of inflated expectations. But then if you take some companies like Amazon, right now, that really rose again. So you had this cycle where there was a boom, people perceived value would eventually be generated, there was a bust, and now some companies like Google and Amazon have become these big tech giants as a result. So then the next question is Bitcoin in a bubble? I think it's fair to say that there is definitely a similar sort of cycle that goes on around these digital currencies, where you do have a lot of people firstly speculating on the value of listed companies, and there's some that are out there that are about to be listed that have very, very high valuations, and that actually have a lot of inherent value in them. And we're listed on the NASDAQ, and we'd like to think that absolutely not in our case, but it's certainly something where people are really trying to predict the value of this ecosystem in the future. And then you've got some of the digital assets like Bitcoin and Ethereum. Well, those sorts of things, they tend to have these boom and bust cycles, a little bit like the internet. And right now, Bitcoin's been surging, and so is Ethereum, because you've got institutions rushing in to start accessing this space. So sometimes it's difficult to understand what the fundamentals are for some of these tokens, and a lot of it's based on perception. All I can say is not every company involved in digital assets will survive, and not every digital asset will survive. But there are some killer apps that are going to come on them. And the main one is the tokenizations of real world assets on top of blockchains. These decentralized ledgers is like the internet. It's going to change the world. It's going to massively disrupt traditional finance. It's one of the things that we're focused on, and as the space matures, it's something to really look out for in these security token offerings or security tokens. And in between then, there's a real value proposition for things like Bitcoin and Ethereum, which are these decentralized ledgers, which really have started to get a network effect of everyone around them starting to say, well, this is money now. And it's the network investors, the network effect, that gives these decentralized ledgers value. And eventually, Bitcoin's now operated for 10 years, and it keeps going up, and it's likely to at some point fall, and it's likely to at some point go up. And is it going to replace gold? I mean, a lot of people believe that, and it just takes a bigger network of those things to keep going up. So I'd like to not answer that question, but then say that it's really up to you to sort of think about, yes, there are definitely hype cycles around this space. And you should think about, try to draw parallels from other events in history that had boom and bust cycles, and then invest accordingly. Like, things are still likely to go up, but you wouldn't want to allocate too much across the board into one thing. You hear stories in 2017, people were mortgaging their house to buy Bitcoin. And some of them did it at the right time and did really, really well, and some of them didn't. So there are definitely lots of risks with the volatility involved. I've got some sort of things to bear in mind, which is that, there's a guy out there called George Gilder. I think he's a very, very interesting person to think about. He was very influential in the late 1980s. And he was on, Ronald Reagan was the president in America at the time, and he sort of celebrated this economist and thinker, George Gilder, and he's still alive today, and he still writes. But he came up with 3 phrases, which I'm going to paraphrase and pretty much totally steal from him, which relate to, the spirit of the times, really. And the first one he says is money is time. And the second thing he says is wealth is knowledge. And the third thing is growth is learning. So money is time. Effectively, he applies this thinking to Bitcoin at the moment, where he says that if you can just timestamp digital messages in the digital ledger, then and you've got this chain of digital signatures of one person saying, I'm giving value from me to another person using something like Bitcoin, and it's over a time series. That's effectively money in its purest form. So he's someone who really, really thinks that the implementation of Bitcoin is a very pure way of coming up with, I've got money and I'm giving value to you, and I'm just using a new system to do it. The second is wealth is knowledge. It's a really interesting point too. And wealth is knowledge to me means, and well, so listen to people like George Gilder say it, that you can try and accumulate loads of money, but the more you actually learn, the greater your capacity to earn becomes. I can apply it personally because I started looking at Bitcoin several years ago, and I got some, and the value of that asset has gone up and down. And net, I guess it's gone up, but sometimes when it went up, I sold some, and sometimes when it went down, I got some more. But sometimes I got the timing wrong. What I did find though is that anytime, when I first got some Bitcoin, I started to really try and learn more about what it was. And I started asking questions I'd never asked before, like, what is money? Bitcoin really challenged my idea of why isn't money US dollars or Hong Kong dollars? Why can it be something else? And when I started asking that question, I started asking all kinds of other questions. And I started saying, well, how do central banks work? And then I found out there were Bitcoin exchanges. So I was like, well, how do I trade? And then I started thinking, how do I trade on two exchanges at the same time and always make money? And then I thought, how can I get my computer to trade for me? And then I thought, what are all the other things that I could go and get? So like Ethereum, and should I learn about what they're doing? So I started the journey. It was quite strange. I started getting interested in Bitcoin, then I got some, and then I fell down this weird rabbit hole of information. And then if you fast forward 5 or 6 years later to where I am now, I've now got a job in this space. And it's because I became infatuated and passionate about the space and started learning more and more about it. And that's actually paying my salary today. And it's because of what I know about the space. So that's a really weird thing, is just trying to acquire wealth. You're actually better off learning about stuff. And then you'll hear people say, do your own research. Well, I think a good thing for you to think about is learn about the products that you're going to buy beforehand. And good things can happen as a result. So I hope that makes sense. Maybe I didn't express it as clearly as I could, but wealth is knowledge is the second idea. And the third idea is growth is learning. So George Gilder talks about when companies apply learning curves. So consultants go out there and you can say, as a company learns how to do its business more, like take a mining company, they go out and every year they get more efficient at mining. So every year they get more competitive and their profit margins can go up, and they can drill deeper for less money. And as a result, they can reach more and more minerals and more resources. And it's because every year they learn how to be better at mining. And any company is like the same. It's like every company that has a bunch of people who are focused on a problem will get more economically efficient as they spend more time learning how to be better at what they do. So growth is learning has this idea, if you think about as an individual investor, your portfolios need to grow. And it's a similar thing with Bitcoin. It's a similar thing with these digital assets. And you can look at traditional assets too. And it's like the more you learn about this investing idea or anything really, the more it will grow. And it's really about, you've got to keep trying to learn about the system. So I personally, with Bitcoin, did quite well out of it, but I came at it from this angle of, I'm trying to learn about a new thing, and I wasn't in this to try and make lots and lots of money. And then some other things have happened in the digital asset space where I came in, the next thing I got was Ethereum, and it was quite cheap at the time when I first got it in 2016. But I got it from the point of view of, I'm only getting this to learn more about it because I want to write a smart contract. And then other things came along, like there was a decentralized exchange called Uniswap. And I started interacting with it because I was trying to learn, not in a big way, not to make lots and lots of money, really just to learn more about the space. On all three occasions, that's when my investments did really, really well. So there's a parallel to this phrase, which is growth is learning, which George Gilder applies in a certain way. And it rings true for me in a different way, which is if you're an investor and you're trying to look at this new technology, Bitcoin, and all those things around the edges, try and come at it from the point of view of not this is going to make me a millionaire in the future, but what can I learn about it? And having a small amount is a good idea because you kind of incentivize to learn more about it once you've got some. But trying to wade in and go, let's sell my house and only buy Bitcoin in the future is something that you probably shouldn't start your investment journey on. You should be trying to learn about it. So I hope those 3 points have some wisdom in them. They've been valuable to me. Just as a final takeaway, I mean, we've been asked to talk about investing here, and I'm not here to give investment advice, but just take those things in mind. I mean, if you looked at this dot-com boom and you looked at 1999 to 2002, and you look at Amazon and you look at pets.com, you see a chart that just goes up really, really high and then it comes down again. And just think about markets all have cycles. So we're definitely in one where there's a lot of people who are afraid of missing out of getting into digital assets. My point of view is, should you get some, you should think about some to learn rather than and have a ceiling if it goes up. You shouldn't necessarily be thinking about this as your main investment asset. But the more you learn about it, and if you find it has value, and if you think it does, it might turn out to be the next Amazon. And in my experience, the best way to learn is by doing. I mean, if you get some of these digital assets, you should try thinking about, well, how do I interact with this network? And can I send some to people? And can I use it? And if I've got some Ethereum, what are the projects people are actually using? Instead of just, just getting some as the first part. Then you might end up to be someone like me with that attitude. You could end up with a job in crypto if you do. So I think that's the way to think about this. It's definitely a really interesting new technology, and it's up to you to learn out more about it. And I think that I should probably start talking there. I think that's been about 30 minutes, and I've been asked to talk for 30 minutes and have some questions. So yeah.
Thank you, Adam, for your sharing. And then, so I believe for the students, they should have a lot of takeaways. And also thank you for your sharing about crypto from a personal and also institutional perspective.
Yeah.
So we got some questions from the students.
Okay.
And then I think because of the time constraint, we can only ask 2 of them.
Okay.
And the first one that would be about, so I think most of the students, they are quite curious is that talking about the hype cycle now, and then for recent graduates or for students, they really want to know, is it a good timing for them to start to own some of the currency or to own Bitcoin? So what's your view?
Yeah, so my answer is unequivocally yes. Should you be getting some digital assets? It doesn't need to be Bitcoin or Ethereum or anything like that. I think that you've got these ones with the biggest network effect, which are Bitcoin and Ethereum. It's worth trying to learn about them first. But then as you're learning about them, just get a very de minimis amount of them to start off with and see what they're all about. So like I say, these are now new currencies of the future, or say this. So what I found is that I spent, when I first got into Bitcoin, a year trying to figure out what the white paper was all about and trying to learn what it was. Then I finally got some, and I just got a very tiny amount to start off with, and I started trying to use it. And then I was like, now I understand what it is. So I think that the very first thing is try and get a very small amount. So think about, I don't know, what can you get for $10 US or $100 US or something like that. Have that kind of attitude and be experimental with it. And use that to try and learn. And once you're confident that if you agree with me that there's value in these things, then you'd obviously come to that independently and form your own conclusion. Then you think about, well, an investment decision, which is separate. So yes, I think everyone should try and experiment with it and try and get some. If you think it has value, then you make an investment choice into that kind of thing. So that's my thought process with it, and it tends to work for me. I hope that makes sense. Does that answer your question?
And then I also agree that the best way to learn is by doing. And then so we also got another question is about what do you think about the decentralized exchange?
Okay. So let's define a decentralized exchange first. So you've seen the most decentralized exchanges that exist on Ethereum. And what's Ethereum? It's a blockchain, and it tries to describe itself as a world computer. And that's what it's trying to be. So what does that mean again? Well, you've got a decentralized ledger, and it has this smart contract language on top of it, where effectively people can write these bits of code called smart contracts that can perform functions. And the functions always involve looking at some inputs, which usually include these addresses on the ledgers, doing computer code using the language called Solidity, and then doing some outputs. And the outputs include just moving value from one place on a network to another place on a network. Well, that's how all code really works. But because it's in this decentralized ledger, and you've got all these people trying to use Ethereum, it can effectively be, you've got this machine on the internet, and it works by, you have to fund it with Ethereum, and it moves Ethereum around as an output, and you can interact with it with a computer. That's really, really vaguely what it's doing. So then a decentralized exchange is where people have come up with a way of, you can send these Ethereum tokens, so called Ether, or other people have used the Ether blockchain to write other types of tokens. You might have heard this term non-fungible token recently, which is quite popular. So that's a type. And another type is fungible tokens. So typically ERC20 tokens. One example is something like Chainlink, you might have heard of. So with these decentralized exchanges, what you're doing is you're sending stuff on the Ethereum ledger to a bucket, like a decentralized exchange, and then you're getting something else back. And it uses a smart contract to be able to do it. Where it's effectively going, you've given me this input, I follow the program and I give you that output. So you're effectively not interacting necessarily with another person. It's these tokens are being held in the smart contract, and you can swap one for another, less any fees from the decentralized exchanges. So that's what a decentralized exchange is. And there's a contrast to that with our exchange, like the Equos one, which is effectively, we've got a load of people, we've set up a computer, and we've got a matching engine, and then people can send funds, and we've got a bunch of people who are, just helping to keep it very secure, very safe, versus these smart contract based model. So the key differences are, it's much cheaper to run a decentralized exchange. And here's the disruptive example of the disruptive power of smart contracts. You don't have the same cost base. You're not paying Amazon Web Services the amount you need to in IT. You don't have to deploy as many staff. It's disruptive technology. Look, it's an example. So that's one really good thing. A bad thing, though, is that Ethereum has got these scaling issues at the moment. So like the early days of the internet didn't scale very well at the beginning. Lots of people had to think of ways to scale it. So right now, it's actually, people are working very hard in the Ethereum network to find a way to make the throughput of the blockchains higher. And the outcome right now is, if you want to send an Ethereum transaction to someone, there's a cost attached to it, and it's quite expensive. So the minimum value you can send to a decentralized exchange is actually quite high. There's a third big problem right now, which is decentralized exchanges are extremely experimental, and they're very, very interesting to watch evolve, and they're changing really, really quickly. The problem is, for us, there's no way of doing a compliant decentralized exchange where you've got a bunch of people from traditional finance will need you to go through KYC and AML processes, and you can't really do that effectively with decentralized exchanges. So that means it's difficult to regulate them. It's difficult to get traditional finance on board. So our company's going to struggle to adopt them until someone can solve that problem with how to run them in a compliant way. So just think about this another way. if you can't identify all the people who are interacting with that exchange, then it's a magnet. You know, it's an incentive actually for criminals to use it. So you'd be mixing all your funds potentially with criminals, or you wouldn't know if you weren't. So that's why right now I think that nevertheless you should look at this as one big experiment, and I wouldn't advocate using loads and loads and loads of money to try risky new technology, but in de minimis amounts it should be fine for you to go and see what they are. You'll probably get some good ideas being the young students that you are today, and you might start a new business on top of one. So that would be interesting. So we're excited by the possibility of them, but we don't think they apply to traditional finance just yet. Maybe they will in the future. That was a long answer, I'm sorry. Did that answer it properly?
Yeah, definitely. Okay. And also thank you so much for your time today.
Yeah.
And we'll start to wrap up for today's info session.
Okay, well, I hope that was useful. And if there's more questions, do you want to send them through? I'd love to add some more. If anyone wants to know more about our firm or any of those sorts of things, or about digital assets in general, then happy to spend more time doing it. And also, I'll say thank you very much for having me. And I'd also like to say good luck with your competition. I hope it goes really, really well, and I hope you learn a lot.
Thank you.
Okay, great.
Great, thanks to Adam again for your sharing today. So if any of you want to know more about Diginix or the crypto trading, then you can scan the following QR code. Then you can know more about Diginix and also AREIX. Before we end today's session, let me remind every one of you to do the registration by the 27th of March. If you have any questions, you can also send an email to hellohk@arex-ai.com. So wish you everyone the best of luck in the competition, and we look forward to see you in this crypto portfolio challenge as well. Bye for now and good luck.